Good day Forex trader. Your USD Forex signal, gap down. Gap looks likely to be filled but Euro weak on Russia confrontation. Today's Euro/USD signals. Risk 0.75%. Trades may only be entered before 5 p.m. London time today. Short trade ideas. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.1202, $1.1295 or $1.1418. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 50 pips in profit and leave the remainder of the position to run. Long trade ideas. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.1089, $1.1056 or $1.0956. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD Analysis. I wrote in my previous forecast on February 16 that the key resistance level at $1.1368 looked very likely to be pivotal over the day. I thought that if we had gotten 2 consecutive higher hourly closes above $1.1368 after the London Open, we would likely see the price continue to rise to at least $1.1418. This was not a good call as the level was not pivotal, and despite getting 2 consecutive higher closes above it, the price ended the day a little lower. Markets are currently prone to volatility and sudden increases in risk-off sentiment as we begin the 5th day of the Russian invasion of Ukraine. The European Union has cancelled a major Russian energy pipeline, imposed heavy sanctions on Russia, effectively closed its entire airspace to Russian air traffic, and has promised to send weaponry to Ukraine with the intent it be used against Russian forces. This is the most confrontational stance ever taken by the EU on anything, and it is likely to weaken the euro as markets look to a situation where there could potentially be a clash between Russia and NATO on the Polish/Ukrainian border. The EU will suffer from economic fallout from the sanctions. The technical picture shows that the price has gapped down over the weekend after the euro, and other de facto risk assets, recovered on Friday as markets bounced back after the initial shock of the Russian invasion. It seems that the gap may be filled, at least to the key resistance level at $1.1202. However, it is clear that this pair is vulnerable to downside movement due to the geopolitical situation being likely to strengthen the dollar and weaken the euro. This bearish outlook is reinforced by the printing of new lower resistance confluent with the round number at $1.1200. For this reason, I am very comfortable looking for a short trade from a bearish reversal at $1.1202 to a target of at least $1.1100. Gbp Usd Forex signal, sterling recovery faces headwinds. There is a likelihood that the Gbp Usd pair will keep falling today as the market reflects on the new sanctions and the possibility of higher inflation rate in Europe and the US. Bearish view. Sell the Gbp Usd and set a take profit at 1.3250. Add a stop loss at 1.344. Timeline, 1 day. Bullish view. Set a buy stop at 1.3400 and a take profit at 1.3500. Add a stop loss at 1.3300. The Gbp Usd pair retreated slightly on Monday morning as investors assess the worsening crisis in Europe and the actions by Western governments on Russia. The pair is trading at 1.3350, which is significantly lower than the highest point last week. UK joins in excluding Russia from SWIFT. The UK has taken a prominent role in ensuring that Russia is punished for its invasion of Ukraine. Already, the UK has placed sanctions on leading Russian oligarchs and politicians in the Duma. And during the weekend, the government joined other Western parties like the US and the European Union to limit some Russian banks to the SWIFT network. It also took part in placing limitations on the Russian central bank. These sanctions will have an immediate and long-term impacts on the UK. The most recent data showed that the two countries did business worth over £15 billion in the fourth quarter of 2021. Total exports to Russia from the UK were valued at over $4.3 billion, while Russia exported goods worth over $11 billion to the UK. Most of the goods and services that Russia exports to the UK is in the energy sector. The pair is also reacting to the latest US inflation data. On Friday, the US published the latest Personal Consumer Expenditure (PCE) data. The numbers revealed that the US inflation rose by 5.2% from a year ago. That increase was higher than the median estimate of 5.1% and was the highest level since 1983. Including the more volatile food and energy prices, the PCE increased by 6.1%, which was also the highest point since 1982. Sadly, the ongoing crisis means that inflation will remain at elevated levels. For one, the price of crude oil has already jumped to $100 and gas prices are soaring. Gbp Usd Forecast. The Gbp Usd pair declined sharply as the invasion of Ukraine started. The pair is trading at 1.3350, which is significantly lower than this month's high of 1.3640. On the 4-hour chart, the pair retreated on Monday as investors focused on the sanctions by Western countries. It has moved below the 25-day and 50-day moving averages and formed what looks like a bearish flag pattern. Therefore, there is a likelihood that the GBP/USD pair will keep falling today as the market reflects on the new sanctions and the possibility of higher inflation rate in Europe and the US. The next reference point to watch will be at 1.3270. AUD USD Forex signal, volatility expected ahead RBA decision. There is a likelihood that the pair will resume the bearish trend today as investors assess the impact of SWIFT sanctions to the global economy. Bearish view. Sell the AUD USD pair and set a take profit at 0.7100. Add a stop loss at 0.7250. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7200 and a take profit at 0.7300. Add a stop loss at 0.7170. The AUD-USD pair was a bit volatile on Monday morning as investors assessed the impact of the latest ban of some Russian banks from the SWIFT system. Investors are also waiting for the upcoming interest rate decision by the Reserve Bank of Australia, RBA, and key economic data. RBA decision ahead. The RBA will deliver its second interest rate decision of the year on Tuesday morning. Analysts will be paying close attention to the decision since it will be the first one since Russia decided to invade Ukraine last week. The decision comes at a time when economic data points to a strong economic recovery in Australia. Recent data revealed that the unemployment rate has moved to lower levels than where it was before the pandemic started. At the same time, the closely watched wage price index, WPI, has moved above the RBA target. The Australian economy is also expected to continue its recovery process now that the country has reopened its borders to foreign travelers. Indeed, flash manufacturing and services PMI numbers published last week showed that business activity was rebounding. Meanwhile, investors are looking at the impact of the decision to exclude some Russian financial entities from the global financial system. Analysts expect that these measures will have some impact on the Australian economy. For one, the volume of natural gas from Australia will likely keep rising. The other key economic data to watch this week will be Australia's exports and imports that will come out on Thursday and the second estimate of the GDP figure that will be published on Wednesday. Analysts expect the data to show that Australia's economy contracted by about 2.7% in the fourth quarter. AUD-USD Forecast. The AUD-USD pair dropped sharply last week after Putin announced his Ukrainian invasion. It moved to a low of 0.7095, which was the lowest level since February 22. The pair then rebounded as investors assessed the initial package of sanctions against Russia. The pair is trading at 0.7180, which is almost 2% above the lowest level last week. It has moved slightly above the 25-day and 50-day moving averages. It is also slightly above the descending trend line shown in black. Therefore, there is a likelihood that the pair will resume the bearish trend today as investors assess the impact of swift sanctions to the global economy. The key level to watch next will be at 0.7100.